Good evening, everyone. Hope you're all doing well. Okay, so this is session 4 of Reboot 2024. Today's session, we are going to take a look at what to buy, and that's going to be our focus. So without much further ado, let's get into this. And let's start by sharing the screen. That would help. Okay, so the screen should be shared now. And so just to restart, session 4, what to buy. So we're going to focus on this tonight, and we're going to take a look at types of stocks that you want to chase or pursue in terms of selectivity and some of the parameters for narrowing down the approximately 4,000 stocks that you can scan for in the US markets, including ADRs. And then we're going to discuss some of the qualities, and we're going to then actually take a look at the outputs of some scans that I ran this evening. And I will leave you with some homework to look at those at your own leisure in terms of chart reading. And then in the December session, we will take a look at some rules around selling and buying those stocks. And that will most likely wrap up Reboot for this year. Okay, so starting off with so the first thing we want to do is want to focus on the smaller stocks. So if you look at the books, and certainly the early editions, the first edition, second edition, and even up to third edition of O'Neill's books, he talks about selecting low float stocks early on while they're still young and they are new to the market. They bring new leadership to a new bull cycle, and they've got a new product, a new service to offer. So typically those are going to be your fresh merchandise into the market. Typically they'll IPO in the prior bull or during the bear market. And then once they kind of get their footing in place, those are the potential stocks where the leadership of the next bull market will come from. Okay, so how do we go about finding these? Let's take a look at some parameters next, right? So earnings drives long-term prices. In the short term, prices can fluctuate irrespective of what the earnings are doing. But in the long term, prices will move to match the earnings. So probably the single most important factor is always going to be earnings. And that's one of the reasons why earnings is stressed in multiple places within not just canceling, but a whole host of other systems. And so the first thing we're going to look for is most recent quarter, is earnings up, earnings growth is up 25%. The next thing we want to look at is also at a quarter, the quarter, has there been acceleration? So is earnings growth increasing sequentially? So that's, and you want to look at probably the last 6 quarters or so, 6 to 8 quarters before that. And then we also want to look at annual earnings. And for this, we also want to set a parameter of 25%. So here is the other thing that you want to do is after you've initially scanned it, as you go deeper, you want to look at a 3-year history. Even with IPOs, you can go back and see what their pre-IPO statements look like. And you want to home in on those that give you year-over-year returns of 25% for at least 3 years. So that's a critical parameter. Next up is sales. Most recent quarter, you want to see sales growing at 25%. Now, if you look at just these parameters alone, right, the sales 25%, annual earnings at 25%, and earnings most recent quarter at 25%, that those are kind of the numbers that you're going to find generally in smaller stocks. Now, there are always exceptions. Um, Quite a few mid caps may fall through into the selection, but you very few big caps and large caps will have these kind of numbers. And when you do get them, then obviously those are of interest as well. Then next up is pre-tax margins. So well, actually after-tax margins. So you want these to be at or near highs. So because before you get to earnings, first you have margins. So margins actually precede earnings, and that gives you a good guide as to whether the company is able to capture more of what it sells. And then ROE, we want to look at least 15%. Model books have shown 17% and much higher, up in the 20s and 30s. So this is kind of your proxy for how good a job management is doing. So if management is doing a thorough job, then the company should have a higher ROE. And then if you're looking at tech companies, and for the most part, kind of stocks that you'll be trading within the CanSlim system will be technology, because that's where most of the innovation is and the new growth is. That's not to say all of them are in tech, but when you're looking at tech companies, you want to see cash flow per share clipping about 20% higher than what the earnings per share rate is. And then we also want to see stocks in the top 20 industry groups, because group strength and sector strength account for almost half of a stock's move. So that puts the wind behind you. And so this one, in the books, it talks about institutional sponsorship. So the caveat with this is you may want to think about this, because at the smaller end of this capitalization, the stock price may not be high enough, or the liquidity may not be high enough to attract the quality institutions. So it may have low sponsorship to begin with. Ideally, you want at least one good mutual fund in there, and that typically maybe TO price, because they'll invest in smaller stocks. But you may not find a whole bunch, so just be careful of that. And also, if you look at some of the stocks that will pass the screens, many of them have a poor sponsorship showing. So this one is less of a hard and fast rule. It's just something to be aware of, though. As always, if you're looking to clip for the longer term market, then the most important factor is you need to understand the story of the company. So scanning by itself is not the be all and end all. Ultimately, you want to find you want to have some affinity with what the company's doing. You want to understand their story a little bit, understand the management, look at their product and services, and you have to answer the question: is this a company that is potentially inevitable in its story? So, will this change the way we live, work, and play? And if the answer to that is yes, you may be looking at a future market leader. Okay, so those of you access to the Simcom website, and so everybody has access to the crowd. Many of you have access to the masters. So typically, when I'll scan and I'll add to the various lists, and here's a recent scan that was pulled today, added to the masters list. So if you went into the masters list, if those of you who have access to it, you'll see these stocks show up by clicking the masters list. And so, but let's go into take a look at additional scans as well. And so here we have, so I pulled a scan just based on some of the parameters that we looked at within the IBD screening. And so, it pulled up Palantir, Halo, UTHR, or Celestica, Step, and GVA as a short list. So this list is something that you can take a look at. It's nice and brief, easy to review. Quickly, you can look through the charts. And the next list is a list that I scanned again this evening. So this one's based on the Masters workshop pull out some criteria from there. This is what came up from that list. And Duolingo, Monday, Apple 11 hymns, Palantir, Crowd, Trade Desk, Freshpet, Shark Ninja all show up in this list, right? So that's a pretty strong list as well. And then if I cut this by market cap, so let's take a look at some of the bigger stocks, and then so Nvidia shows up, Micron shows up, Nuvasic, Deckers, Meta, Anet. So these are all pretty strong stocks. So you get to see an idea of how different capitalization stocks show up. Let's take a look at mid caps. So if I screen by mid caps, you get some pretty good old ODD, ACAD, Pay. And then if we scan by small caps, we get here USAP, NGS, Burn. And then finally, I run a scan just based on the parameters in a different tool outside of investors.com with similar parameters. And this is the list I get from there. So you can see it's picked up a lot of these other ones. And it's a very healthy list. And this scans across all of the market cap sizes from small, medium, and large, ADRs as well. Slightly, the only other parameter I did was price over 15, and stock must be trading at least 100,000 shares daily. But you've got some small stocks in there like CPRS. Kinsale was a small stocks now, has moved up into kind of the mid-range category. And you can see ODDs appeared, PODD, Court, which is up here, Palantir, which is up there. Also Powell is in here, HIMS, which we got up here, Nuvasiv, Nvidia. So this is kind of a good stock that I run on a weekly basis, and a lot of the times I'll key this into these stocks into the Syncom website for review. So this is a short session because I just want to leave you with a lot of homework. So what you should do is take a look at all of these tickers and just put them into a chart, into your charting tool. Look through them on a weekly time frame and look at the strength of the ones that are extended, and look for the ones in bases and identify where the pivots are and where you may potentially want to be buying those of the ones that you'd be interested in. In the next session, we will look at this list, and I will pull a fresh list for the next session, and we'll do that exercise, and we'll identify pivots and narrow it down to maybe 3/5 candidates that could go into a portfolio. And we'll also look at the onesie concept again. So next year, I want to run a live portfolio using this technique here and the information that we've gone through in reboot sessions 1, 2, 3, and 4 to run a live portfolio. And we'll probably follow the USIC Trading Championship rules. So there'll be a minimum for the portfolio size, and which is about $20,000. You can run it with a lower or higher if you're following. And then we'll trade it, and we'll look at the brokerage statements each month and see how we're doing, and we'll set some targets for next year, and then we'll see in terms of percentage to goal how we're tracking, and we'll track the equity curve and all that good stuff. So next year we'll put all of this into practice. So we have one more session this year that'll wrap up the reboot sessions for 24. We'll do this again, and we'll look at additional information in 25 over and above what we looked at 24. But the mainstay and the graduation path from here will be to follow a portfolio which we will run and manage and put all of this into practice. Okay, so nice and brief and succinct session. So we'll leave it here, and I look forward to our final session next month. Thanks, everybody, and I will see you next time. Goodbye.